but very large number of innovations and startups are in the area of finance, or you can say generalized as fintech. Either they are enabling the financial services, or which means they are giving the financial services to the customers, or they are developing something which is enabling these financial services to be distributed to the customer in a better way. Because traditionally the finance is being given to the customer by larger banks, by larger NBFCs, and therefore there has always been a very, very big limitation on their part in terms of being flexible, in terms of servicing a very large segment of the customers, which otherwise appear to be difficult to, one, process, do the risk assessment or underwriting, and therefore they tend to avoid that. It also used to be very manual, and therefore it used to involve a very high transaction cost. So typically these large banks, etc., they will stay. During last 10, 15, or maybe I will say 15 years, the technology is enabling these transaction processing or evaluation or underwriting to be done at a much lower cost. And therefore it is enabling new players to go into this space and capture it. A large part of it is happening by partnering with what you call a larger bank or financial institution. I'm talking of the lending side, because typically a lending side will require very large amount of capital, and a startup is unlikely to have that kind of a capital to start with. So that remains a challenge. Although there are a significant number of startups in the space which are into lending, and they have been able to raise good amount of capital. So that's one space one can say. And when we come to the other side, which is the wealth management, and when I say wealth management, means savings product, including insurance. So which means insurance also is kind of, savers are the typical target customers for insurance. So if you look at that side also has evolved quite well because of the one, data becoming available. A lot of data has become available for you to do kind of KYC or collect some other information and apply analytical techniques, apply methods of onboarding of clients, acquiring clients of a different nature. So it became kind of aggregator come analytics, and then maybe offering those customers to larger players. So you acted as intermediary, or you acted as aggregator, or you did it on your own, whatever method. But this is how it is evolving. If you see this space, so therefore typically a fintech tries to find a kind of a niche space, either on the lending side or on the wealth management side. When we come to the lending side, the niche space could be that somebody could be specialized on a supply chain of, let's say, construction industry. And therefore, he understands the whole supply chain, whole distribution chain, and gets into financing that. Somebody specializes on some other area, and like that, they try to stick to that chain. And in that chain, there could be vendor financing, there could be distributor financing, there could be retailer financing. And since they try to capture the whole supply chain data by interacting with different nodes, and in the process they have the data to analyze and understand the risk involved, understand the opportunity involved, and do a much efficient, lower cost underwriting, including maybe, although AI gets used very loosely, but some algorithm, some logic gets applied for you to bring down the cost. So, people develop these kind of models, and it is working quite well. So these were the niches which were initially not created as a segment. It used to be part of the general SME financing. Okay, and where you will do general SME financing for a bank becomes difficult to segregate into different types of industries because you can't understand the risk. And like that, these startups have come in. When they have come in, naturally the whole ecosystem, whether it is in terms of the credit rating of the customer, the credit score becoming available, the kind of very interesting GST data becoming available, so a lot of other data other than the collateral started becoming available. When a vendor is doing a transaction through a principal, the data becomes available. So typically the sourcing point becomes the principal. You go to a large organization and try to capture the whole vendor segment, and you are able to get data so that you are able to underwrite. You need to understand the demand, and you also need to underwrite. Both the things are required. Demand is quite easily understood. India is, perpetually the demand is there for finance. So that's not an issue which requires much of analysis. What it requires is how do you do the underwriting? How do you analyze that? How do you manage the risk? And for that, the data needs to become available. And that data availability has become quite good. In between, a lot of service providers have come in. There are so many startups which are playing into the space of, providing service to these lenders in terms of client onboarding. So, there are specialists who are only on KYC of the client. So the KYC of the customer can be done within 5 minutes or 10 minutes by collecting data of Aadhaar, doing some video verification, AI application to facial recognition, etc., etc. Similarly, somebody is doing kind of, financial statement analysis, your bank statement analysis, your other things. And so, the different specialists have got developed, and they are feeding into this. And then these lenders are playing into, for them, the time to market reduces quite a lot. So a lot of these things have become available. So this is very, very interesting. The lending space has got developed, but I think still there is a lot of space for you to play around in identifying the niche and being the service provider in this chain, which is less capital intensive. When you go pure lending, it is highly capital intensive and becomes difficult for a startup. But if a startup wants to scale up, these are the niches it needs to identify and try to see whether it can scale it. Okay. So that is the lending ecosystem. Similarly, when we come to the saving ecosystem, whether it is investment or whether it is buying an insurance policy, whether it is investing into mutual funds, whether it is investing into direct equity, so you'll find that a lot of data has become available with these people, with the startups, and therefore they are able to play around and offer niche products. So, people are, for example, I was looking at a startup which is targeting only children. So how do you tag that credit card to the parent's credit card? Earlier, it used to be simply tagging, but now it goes one step beyond. It tags, it analyzes a lot of behavior, it guides them in terms of, it introduces them to world of finance, which is savings, what is saving, what is mutual fund. So, at an early stage, it also starts teaching them about finance and directing their cash flow towards revenue generating stuff also. So it is not only budgeting, how do the kids budget their expenses based on the allocation given to them. So those kind of, like that, people are identifying such niches and playing into that space. What is required for this? So therefore, when we talk about guiding a fintech, people need to identify this niche very clearly and see what is required to capture that niche. What is it that they have got in terms of capturing that niche? That becomes very critical. Today, it is not so critical in terms of technology. For example, we keep talking about artificial intelligence, but I think in few years' time, maybe 2-3 years down the time, you will find that the large service provider, like a banking software being provided or a mutual fund back office software being provided, that will come embedded with a kind of analytics you want, which may be called as artificial intelligence. So that will come automatically. But what is important is, what is it that you've got that you will be able to penetrate into that niche which you have identified? You should have some familiarity, you should have some acquaintance with that particular niche. You should have some leverage because of which you will be able to exploit that niche. If you are able to do that, then comes the second challenge. The second challenge is, as you rightly pointed out, how do you scale up? Because the moment you enter into that real world and with your startup, lot of assumptions will go haywire. How do you manage the whole thing and identify what is it that is playing in your favor? That factor, once you are able to identify, and for that you may take time. Maybe you are not able to identify. It is not that compulsorily it has to be identified within next 1 month. It gets identified only when you play in the market and you are consciously looking for that factor. These two things are important. many times what happens, the startups will go into that, but they will get distracted. I need to do this also. I need to scale up this part also at any cost. And they are not focused on identifying that unique factor on which he can play around and then suddenly scale it up. So this is something where our role comes. The experience helps you to identify. So it is not that on day one it will get identified. Theoretically, it is there. The startup itself would have identified, that is why it is coming into that. So we may do some amount of idea validation. But having validated that idea, when you go into the field, you come across multiple things. And that is where our role comes in as mentor, that we work with you in terms of guiding you, in terms of hearing you out, see how the response is coming with the assumptions you have gone into, and then be ready to identify the key factor. And that, the moment you have identified, invest your money on that and scale it up.
Very helpful, actually, Akhilesh. Thank you so much. It's very comprehensive and thorough. And now there are a lot of fintechs emerging in the banking space also, so-called neobanks, right? That's then you see something like Cred emerging, which is just becoming an intermediary, collecting data and then leveraging the data to provide new services. Now they are completely innovative, absolutely. So they're changing the market landscape. We really don't know whether the existing banks will survive with the kind of customer control shifting out of their hands. So what's your view on that?
Not really, no. Not really. It is not. So the whole model of the startup today is partnering with the bank. So when what these people are doing is, they are doing a lot of work which bank being very large are unable to set up a team separately and empower that team in a manner that it is able to exploit that opportunity or identify that opportunity. So most of it, 99% of it is partnering. Like I have the detail of top 20 such fintech, including Cred. And each one has got some uniqueness of the model. For example, there is somebody who does the complete thing that's based in, I think, Chennai. He does the complete thing, which means onboarding of our identification, KYC, onboarding, and thereafter the collections, which means it assists the bank even in underwriting and collections till that stage. And what it is proclaiming, and probably it is verified also, is that it has not incurred any loss, which means its banks have not incurred any underwriting losses till now. So that's one. Somebody is like Cred, which is more onto using score system. Similarly, somebody is identifying certain, as I told you, certain supply chain system. So they identify a product and end-to-end supply chain, they try to analyze and fund, which means they will fund the supplier, distributor, retailer, and maybe even go to the customer. That helps them to understand the whole supply chain. So different specialists are developed. Like BNPL. What is BNPL? BNPL is basically a credit card kind of a product. Buy now, pay later is a credit card. Unlike credit card, so what credit cards have been doing is they have been charging very high rates. But if you have analyzed the customer behavior, you have understood everything, maybe you can lower the cost and do much bigger business. So it operates with the same old concept of subvention being available from the manufacturer. In this case, instead of along with manufacturer, or maybe instead of manufacturer, it is the e-commerce player. It could be Amazon or somebody else which is giving you the subvention fee, and you are playing around with a credit of, interest-free credit for a period of 7 days or 10 days or 15 days, and thereafter you earn something. Since the whole transaction takes place along with buying without any transaction cost, so you are able to eliminate the kind of service fee which is required, and thereby you bring down the cost of this kind of a borrowing by the purchaser. So that way it turns out to be much cheaper than credit card. The only challenge is going to be when the interest rates become very high. Now we are moving into that space. That when the interest rate becomes higher, then how these players will be able to offer interest free for a period of 15 days. That could be a bit of a challenge, which means they require higher subvention from the products or maybe e-commerce. So these are like ONDC, which is being talked about. Other day I was hearing about ONDCs on the CNBC. So I think the key part, what he was trying to highlight, was that finance will be available from day one. So finance plays very, very important part in any kind of supply chain activity or selling activity. In India, that is very much essential. And typically, you will find that you make money. If it is a trader, he makes money not on the margin, he makes money on the credit which is being available. Like in our business, you see broking, we make money only on the people who don't pay on time. Otherwise, the brokerage just meets the cost.
We are mentors from IIT Delhi and I'm Bangalore. I4 Mentors Foundation. We are a not for profit. We are starting a cohort soon, and these are conversations with cohort leaders.